It doesn't always work like that. Sometimes I have to turn. Okay. Okay, we've got it. Sorry, guys. Um, yeah, I think it's not working now. Okay, sorry. Okay, so U.S. markets opened up at or closed at the highs of the day on Friday's session. We had a two-day quite significant rally on the back of obviously hopes of a deal on the debt ceiling and possibly even the budget. Neither one of those actually ended up materializing on Friday. We still have had no resolution over the weekend. Obviously, you can see that that this morning with the S&P futures trading down over 0.75%. European futures are down about 0.3% at the moment, but I think actually still remaining reasonably in check, considering. So we're gonna have to see how this plays out today. We had a temporary halt to trading on the gold futures market on the CME on Friday because of quite significantly larger than average volumes, and obviously a big spike down in price movement, so they temporarily halted it just for a little bit, and then reopened it and didn't really go anywhere. But interesting to note, we'll show that chart in a little bit. Asia, you can see there we were closed in Hong Kong and Japan. But the rest of the markets fell across the board. Like I said, not as bad as you would have thought. I mean, considering the S&P futures down 13 points this morning, Australia is only down, 0.3%. I think that's held quite nicely in check. There was some reasonably weak data out of China over the weekend. We had a couple things. We had export numbers, which were really poor, and then we also had inflation numbers, which were hot there. So I think there's a couple of things to take out of that. One is that maybe global growth isn't quite what we thought it was, and two, obviously with the inflation running a little bit hot there, you may start to see demand in China starting to taper down as they might have to start to tighten things up again. All right. Some corporate action. We had Anglos, which was raised to buy versus hold at SocGen, and we also had SAB Miller, which was cut to hold versus buy at Citigroup. Also saw that one on there this morning. We have a few things going ex-div today. We've got JDGs, WBOs, AVIs, and CPIs. So just keep that in mind. I mean, those aren't really popular stocks to be playing, but if you are involved, don't screw that up. We've got a little bit of market data out today. Like I said, we had trade balance and import numbers out of China, also PPI and CPI numbers. As we said before, CPI numbers were hot. Export numbers were a big disappointment. And we also had Australian home loan numbers, which were weaker than expected. And then we've got European industrial production a little bit later. So not a whole lot left to come today. We do have a Columbus Day in the States today, so the bond markets are closed, but the equity markets are open. So that actually could get a little bit more interesting, seeing as how we've literally only got, we've basically got tomorrow and Wednesday before the real pinnacle of the debt ceiling debate. If they don't come up with something by the end of today, I wouldn't be surprised if the bond market or the equity market started to exaggerate itself a little bit because the bond market's closed today. So just keep that in mind. That actually could be a little interesting scenario that could play out this afternoon later in the U.S. session. All right, let's get into the maps. Okay, first thing we'll look at here is spot gold. We talked about, we sent this out on Twitter on Friday. We'd been talking about this for 2 or 3 days, kind of leading up to this. You could quite clearly see that this was likely going to break. If we shorten it up a little bit, we can obviously see it a little bit better. But the head and shoulder pattern here is just very, very clean cut. And so you could see, in terms of watching the trade action for these sort of things, you could see on Friday as we traded down right here to support, or maybe around 1384, 1385-ish. We tested it on about 3 or 4 occasions, and every bounce was just a little bit less and a little bit less and a little bit less, and then it just started to hang around there, and you kind of had the idea that it was going to really snap down as we got through it. On the back of that, obviously, we saw a sell-off in some of the golds. We also actually saw a sell-off in the other precious metal space. We saw platinum get hit. Platinum's also looking a little bit interesting. I mean, it's not nearly as classic and as clean cut, but it's still looking a little bit like a head and shoulder here on platinum. But we've sold off well through the neckline. But bottom line is, we still definitely, it looks like we have more potentially to come. What I'd like to see is really just a hole below us, breaking to these new lows below maybe 1368, which we're about $5 above at the moment. So I think if we can push lower than that, we can probably continue to go lower. On the back of that, if you look at Impalas, we shorten Impalas up here a little bit. It's not quite, maybe shortened it up too much, but shorten Impalas up here, and then you go back and you have a look at platinum there. That it's too short, sorry. You can see that chart doesn't look all that different. It's just that the right side of the arm really hasn't come down on the Impala's chart yet. So this potentially, to me, is setting up like a little bit of a maybe a rough head and shoulder chart. What I would look to see is maybe a break below this 115 level, which I think also kind of coincides nicely to where we broke down from, going back all the way in April and May. That was really the major breakdown. You saw three huge bars. Remember, we were on that on the short side for a nice 15% down move back in May. And that's so this 115 is actually a very significant level. You can see here too, we've come down. We traded yesterday, or on Friday, sorry, we traded, I believe, at around 1560, 1570, and a little bit of volume there, kind of right after the gold price broke down. So if we see 115 drop, I think this thing could enter into a little bit of a head and shoulder pattern and potentially go a little bit lower. All right. Look at True Worths here. True Worths and Foschini also. We've been talking about those last 2 or 3 days. We must have shown those charts a dozen times. You can see there, obviously, we broke up out of a continuation pattern in Foschini, in True Worths. But you can also see, this was a level here around 94. We touched it on the wick here back in April. We closed here in May. We wicked up there in September, and now we just managed to get a nice move above and close above it. So this level at 94 also significant. We managed to close up at 94.79. Obviously markets are going to open up under a little bit of pressure this morning, but I would think that we'll be able to get a kind of move from the bottom end of this target range, call it 90 Rand, breaking out through. I would really put the breakout on the continuation pattern at 92.5. So I don't see any reason why we can't have another $3-4 upswing here in True Worths on the back of this. We'll also have a look at Foschini, which, like I said, is one of the other ones that we've really been focusing on. These patterns we're getting a couple really nice looking kind of classic patterns. I really like this one just strictly because how many times we touched at 110. We came back up. It's harder to see because of the 200-day moving average here, but we came back up. We tested 110 again and the 200-day moving average, obviously, and then we made a nice little breakout here. I think there's some sort of resistance here. If you can see that level there around 115, you can see that there is some sort of resistance there. And I think that we probably have a little bit of a higher target than that, maybe even up toward 117-ish on Foschini. All right. Let's look at Cecil. Cecil, we've kind of been talking about a bit here. Right here at 394, you can see there we haven't gotten up there on a closing basis, but we wicked it 3 times. And what we did do on Friday was make a new closing high and kind of a multi-year closing high. So that has me a little bit concerned. If you look at this on a closing basis, we're breaking out a little bit here. So I think this is something that we need to watch today. If we get above 494, I think this thing can be played on the long side. If you're short, probably need to be out. But like I said, it's a nice little setup on this pattern, and to be quite honest, it's looking bullish, like we are going to move to the upside. So just watch that closely. The last one we're going to look at is actually in London, British Aerospace. And you can see here we've kind of come down. I'll just get to the end here. We came down on Friday really hard, testing major support on a intraday basis. You can see there we got down to about 435. closing basis, we were kind of close to making new closing lows. If this thing drops, it could definitely trade down to its 200-day below 4 pounds. And that's it for today, guys. Thanks a lot.